the stock market resumed from the public holiday yesterday, and of course, it's actually so much profit taking. I mean, many people dumping their shares for cash is what we witnessed yesterday on the floor. That lead to about 139.34 billion naira. I mean, shaded from the market capitalization at the close of the market, and of course, the market indeed dipped by 0.34%, and the all-share index as well also lost over 300 basis points. There, I'm being joined now on phone by David Adonri. They call him Prof, one of the oldest stock broker on the floor. He's the vice chairman of the board of Highcap Securities. Good morning, Mr. Adonri.
Thank you very much. Good morning.
It's a pleasure to have
with you.
It's a pleasure to have you on Trust Television. Let's look at the investors. I mean, recording nearly 140 billion naira losses yesterday. I mean, it appears that Santa has indeed left the market very early.
Well, we may not jump into that conclusion immediately because, this is a crucial period for the equities market. Tomorrow being the last trading day, portfolio managers would like to reshuffle their stocks and might be try to move the market up tomorrow. So we can still say that the Santa Claus effect has not fully disappeared yet, notwithstanding what happened in the equities market yesterday, the decline we witnessed. Actually, it was just a few sectors of the market that were affected because out of the 6 main index sectors, I think only 2 sectors declined, and the stocks that were affected were highly capitalized stocks, which dragged the market down. Otherwise, generally, 4 other indices appreciated, and if their effect was material, then the market would have appreciated yesterday. So I would say that the market is still upbeat, and that may be reflected today and then tomorrow.
All right. Can you be specific? You mentioned some of the bellwether stocks that did not do well yesterday. Can you be specific?
Yeah, I think Dangote's Mint was one of those stocks, and this bank, Stanbic IBTC, was another major stock that declined. But other than that, several other stocks appreciated yesterday. Although market sentiment also waned a little bit. Market sentiment measured by the number of stocks that declined compared to those that appreciated actually waned yesterday. But like I said, notwithstanding, investor sentiments remain high, and what happens today and tomorrow will eventually determine how the week closes. But as usual, if we are to look at previous seasonal trends, the market always closes strongly on the last trading day of the year.
All right, let's hope so. The last trading day of the year will probably be tomorrow. But now, will you attribute to what happened yesterday to probably maybe profit taken by investors of those companies?
It's likely that it was profit taking. It's also likely that a strategic action may have occurred in those securities. You know, we cannot tell because we don't really have the granular information as to what happened that underpinned the sale of those securities yesterday. But we cannot rule out the fact that perhaps profit taking was there. But I am sensing that some strategic moves may have occurred in those securities.
All right. Let's look at the market generally now. The market seems to have weathered all the storms from the larger economy to stay strong this year. Quite a whole lot. A lot of people were even surprised, given that the market is a barometer through which the economy performance is being measured. A lot of difficulties in the economy, but yet the market remains so strong. What would you attribute this to? Some say the local investors are actually finding investment opportunity in the market.
Yeah, the movement of the market actually diverged from the realities of the fundamentals of the economy. But that notwithstanding, several factors influence the rising sentiments of investors, especially in the equities market. The fact that there was a peaceful change from one federal administration to another, and also that an administration that did not perform very well was also leaving, was enough to have salutary effect on investors' sentiment, which we also witnessed. And of course, when President Bola Ahmed Tinubu made his inaugural speech, it was very clear that he had hit the ground running very, very fast, especially with the audacious macroeconomic policies that he rolled out, which immediately effected some market reforms. So, and those are market reforms that the market had been expecting for several years to correct a lot of abnormalities that had held both the market and the economy down. So those market reforms resonated well with investors and increased their sentiment. So that caused a lot of attraction to equity. But also within the period, the debt market was very active. If we judge by the decline in the sovereign bond index on NGX for the year, which has declined so far by almost 10%, indicating therefore that the yield on debt has been quite high. The yield has risen debt too within the year. So it's like while capital appreciation has come up for equities, yield has risen for debt, which is quite unusual. It's like investors enjoyed from both ends, like burning the candle from both ends.
Okay.
You know. So, but some of the fundamentals were also stimulating. For instance, while there were decline in the fundamentals of some of the real sector manufacturing companies due to the collateral damage they suffer from market reform. But of course, you know that the banking sector enjoyed very heavy windfall from the market reform, you know. So it was like mixed fortunes for those listed companies, but generally they all worked well to drive the sentiment of investors. The
market, indeed. You talked about the banking sector. We saw impressive results from them in almost all the quarters, from Q1, Q2 down to Q3. And of course, we're also expecting something positive in the Q4 as well. How much of confidence do you think all of this result actually brought to the market?
Yeah, I have actually been talking about improved investors' sentiment as the major factor that has driven the equities market to this level. But I would also include in investors' confidence that was boosted along the line. For instance, the measures taken by central banks to start repaying the trapped funds from foreign investors remarkably improved the foreign investors' confidence in the market. And I think they have started actually paying those investors whose funds were trapped, and also some other operators in the economy whose funds were trapped, like the airlines and so on and so forth. So those boosted investors' confidence. Then the windfall that banks experienced has also boosted investors' confidence in the banking sector generally, because as a result of that windfall, banks, in my own view, are actually adequately capitalized now. And so they are in a position to assuming more risk or increasing their business activities that will positively impact their bottom line.
All
so that is capable of generating, boosting investors' confidence in the banking sector. But in the real productive sector, especially manufacturing, where we have seen a lot of them operating with negative shareholders' funds now. But I think the situation is temporary, and investors also know, because as the economy readjusts to the new price level arising from the market reform, then obviously the manufacturing companies will also start to recover with time.
All right.
And it's expected that sooner or later their
things will change.
Shareholders' funds will become positive.
Okay. Okay. Prof, before we look at the outlook for 2024, let's also look at the contribution of portfolios and, of course, corporate investors. Which one would you think, in a way, was much positive on the market?
Okay. You know, the equities market has been quite rich. At least the gain so far in the year is about 44%, and so many records were shattered in the course of that.
Absolutely.
Now, the equities market has changed over time. You know, before the meltdown, it was a market dominated by retail investors. But now, the equities market is dominated by domestic institutional investors, the PFAs, insurance companies, and so on. And so the kind of head mentality we used to see in the past, that always served as driving the market towards a direction, has virtually disappeared. We now have corporate players in the market deliberately taking investment or divestment decisions, you know, which are not based on panic measures, but well-researched information. So as a result of which the corporates have taken over investment activities in the market. Now, looking at the equities market in 2024, I would say that the prospect is quite bright. Because, like I said, the fundamentals of banks are solid and the prospects are bright. When the market also readjusts to the market reforms, the recovery in the reproductive sector is expected to improve. And all these will trickle down to the capital market. But in my own estimation, as you are aware, the secondary market for equity is already overheated, with the all-share index trending at over 74,000, you know, a market capitalization at over 40 trillion naira. 2024 shall be a year where attention will then shift to the primary market, especially for equities.
All right.
As a lot of the real sector operators come to recapitalize so as to repair their damaged balance sheets. And if the central bank also insists in the recapitalization of the banking industry, we'll also see a lot of activities in the banking sector approaching the primary market to recapitalize. So 2024 hopefully will be a year for the primary market to boom in the capital market.
Impressive there, Prof. Some analysts have also said that the performance of the market in the coming year, that is 2024, will largely depend on how well the government implements some of the policies that it has introduced as well.
Yes, because the market reforms have a long-term benefit, but short-term inconveniences. And so if the government does not panic to roll down the clock of reforms and continues the process of reforms with undiminished intensity, then of course the long-term effect of benefits of those reforms will be enjoyed from next year. So we therefore hope that the government will be resolute in implementation of those reforms and the continuation of further reforms that should enable the market to the economy to regain its productive momentum, which therefore means that a lot of fiscal policies should hit the economy next year, in addition to the market reforms that we have seen this year. And they all therefore, so I agree with those analysts that if the government does not waver and pursue those reforms with iron determination, of course, they will all trickle down to strengthen the fundamentals of the economy, which will also strengthen the fundamentals of the capital market. But the capital market has a very huge role to play from next year in recapitalizing the economy through its capacity to form enormous capital that will make the economy generate productive employment and create more wealth next year and moving forward.
All right, impressive there, Prof. But before we go, how is the market doing at the moment, and are we likely to see a repeat of what happened yesterday?
No, it's still early in the day, and the market is looking up so far. So we are hoping that the loss for yesterday will be regained today, and then by tomorrow it will be a market that has finished very, very strongly. You know, but although the market is difficult to predict, but so far from what we are seeing, the indications look very, very bright for today.
All right, Professor David Adonri there, the Vice Chairman of the Board of Highcap Securities. I must thank you for your time on Business Daily today. We appreciate your, very deep contribution there on the show.
It's a pleasure. I'm happy being with you.
Thank you so much.
Thank you.
All right, have a nice day on the floor. Yes. All right, with that is a wrap on the show today. We'll be back again tomorrow. Of course, for the last trading day of the week is tomorrow. We'll be here to give you updates of what